end 2028. So, Speaker, this policy is anchored on the objectives of the Ghana Gold Board Act, Act 1140, which mandates the Ghana Gold Board to generate foreign exchange for the country and support gold reserves accumulation by the Bank of Ghana. The policy is also informed by the country's cycle of economic downturns, recent macroeconomic development, global risk assessment, and Ghana's long-term economic transformation agenda. Mr. Speaker, historically, Ghana has relied heavily on inflows from gold, cocoa, and crude oil exports to build international reserves. However, over the last decade, the country has relied largely on costly swaps, sale and buybacks, and other short-term facilities, as well as Eurobond borrowings to build international reserves, resulting in significant debt service obligation to the people of Ghana. Mr. Speaker, these developments in the last decade led to the unsustainable debt situation in 2022, the resultant debt default and restructuring, haircut, and subsequent requests for IMF-supported ECF program. So, Speaker, I repeat, these developments in the last decade led to the unsustainable debt situation in 2022 and the resultant debt default and its resulting haircut and subsequent request for IMF program. Mr. Speaker, despite cocoa's historical importance, its contribution to sustainable foreign exchange stability has been undermined by price volatility, low production, climate risk, and limited value addition. Crude oil, which initially promised to provide fiscal relief and balance of payment support, is now declining very fast due to lack of investment in the last 8 years and waning investor confidence, resulting in 6 years of consistent oil output decline. Right, Honorable Speaker, despite the progress made in 2025, growing global uncertainties make Ghana vulnerable to external financing volatilities, commodity price cycles, global geopolitical tensions, climate-related disruptions, and regional security risk. These have simultaneously lifted gold prices to historic high and provided an opportunity for Ghana to build reserves to secure the country's external sector against any major shock, to strengthen Ghana's first line of defense. Mr. Speaker, given these uncertainties, the conventional threshold of 3 months of import cover is no longer adequate for any country. Government therefore seeks to accumulate a strategic buffer beyond the conventional reserve adequacy levels and build an economic war chest of 15 months of import cover by end 2028. And this is to safeguard macroeconomic stability, break the cycle of economic downturns, sustain confidence in the currency, and improve investor confidence. Also to reduce exposure to external shocks and support long-term economic transformation of our dear country. Mr. Speaker, the objective of this policy is to build reserves to 15 months of import cover to support Ghana's long-term economic transformation without compromising economic stability. Historically, Mr. Speaker, this strategy is not new globally. After the 1997 Asian financial crisis, the most affected countries embarked on aggressive foreign exchange reserve accumulation as a key policy response. This was driven largely by a desire for self-insurance against future sudden capital reversals and crises following the traumatic experience of relying on IMF bailout, which came with some strict conditionalities. Mr. Speaker, this helped these economies far much better during the later shocks like the 2008 global financial crisis without depleting their external reserves. Right, Honorable Speaker, a diagnosis of Ghana's reserve trajectory shows a pattern of episodic accumulation linked to opportunistic external borrowing and seasonal cocoa outflows, followed by drawdowns to meet external obligations. Mr. Speaker, clearly you could see from the chart below that over the years, government of Ghana has been building reserves largely from Eurobond borrowings and borrowing from the IMF over the last few years. Mr. Speaker, from a reserve position of 5.4 months of import cover in 2021, following an Eurobond issuance of $3 billion United States dollars, reserves sharply declined to a low of under 2.3 months of import cover in September 2023, thereby triggering the depreciation of our currency. The depreciation reflected a strain on external buffers in the face of constrained financial options, capital outflows, heightened macroeconomic pressures, and the need to meet critical foreign exchange obligations such as debt repayment. Right, Honorable Speaker, global gold prices have reached unprecedented levels, driven by heightened international risk, sustained accumulation by central banks, and strong safe haven demand. These developments significantly boosted export earnings and strengthened external buffers for gold-producing economies, including Ghana. Mr. Speaker, with prices far exceeding their long-term historical averages, gold has emerged as the most reliable and immediate instrument for accelerating reserve accumulation without increasing public debt or introducing distortions in domestic market. Projections from major international financial institutions indicate that gold prices are likely to remain elevated and favorable over the medium term, underscoring the resilience and persistence of the current price cycle. Right, Honorable Speaker, the outlook for gold prices provided a solid foundation for policies that strengthen external buffers, reduce vulnerability to external shock, and support long-term financial stability of Ghana. Harnessing this momentum will be essential to building a more robust and resilient reserve management framework capable of withstanding future global volatilities. The sustained elevation in global gold price presents a strategic opportunity for gold-producing countries to further enhance their reserve build-up framework, reinforce their external position, and enhance macroeconomic resilience. The Speaker, major gold-producing countries and central banks are capitalizing on historical high gold prices by increasing production, export, and official purchases to strengthen their external buffers. China, the world's largest producer of gold, continues to expand its domestic refinery capacity and use gold both as a key export and as a strategic reserve asset for diversification. Similarly, Mr. Speaker, Russia has leveraged on this elevated price environment to boost gold export revenues and channel part of the proceeds into reserve accumulation, using gold as a shock absorber against financial sanctions and global volatility. Mr. Speaker, Australia benefited from high prices through stronger export receipts, improved terms of trade, and higher fiscal and external surplus, which indirectly support reserve strength. Right, Honorable Speaker, across these countries, elevated gold prices are being deliberately used to enhance the foreign exchange inflows, support balance of payment, resilience, and reinforce reserve position amid heightened global uncertainty. This current gold price surge presents a timely opportunity for Ghana to leverage the country's gold resources to accelerate reserve accumulation and reinforce long-term external resilience for our country. Right, Honorable Speaker, the primary objective of the Ghana National Reserve Accumulation Policy is to increase Ghana's international reserve to 15 months of import cover by the end of 2028. To support long-term structural transformation while safeguarding the macroeconomic stability. To To achieve this, the following intermediate targets are set. First is to achieve a minimum of 8.6 months of import cover by end of this year, 2026. Second, to exceed 11.8 months by end of 2027. And third, to reach 15 months of import cover by end of 2028. Mr. Speaker, these milestones will be reviewed annually based on realized imports, prices, production volumes, and financing conditions. Right, Honorable Speaker, our gross international reserves at 5.7 months of import cover at the end of 2025, the gap to achieve the target of 15 months of import cover is 9.3 months of import cover. This implies an average annual accumulation of 3.1 months of import cover over the next 3 years. In 2025, Ghana accumulated additional gross international reserves of 1.6 months of import cover. This provides momentum for the country, but must be accelerated to achieve an average of 3.1 months of import cover in the shortest possible time. Mr. Speaker, to secure the target after netting out debt service, FX operations, energy sector payment, and statutory outflows, the strategy requires an average of 9.5 billion United States dollars annual additions to the country's gross international reserves. Mr. Speaker, to achieve this, the reserve accumulation target, the GANRAP has set an operational weekly gold purchase target of about 3 tons per week. At 3 tons per week and a price of $5,000 per ounce, gross receipts are projected at approximately 25.28 billion United States dollars annually. Mr. Speaker, Ghana's strategy for the acquisition of 3 tons of gold per week is in two folds. The first is the Ghana Gold Board to acquire up to 2.4 tons of gold per week from artisanal small-scale mining sector. The Speaker, the Ministry of Finance will be making budgetary allocation to the Ghana Gold Board to achieve the objectives. The second, Mr. Speaker, the Ministry for Land and Natural Resources is to invoke the preemption right under Section 3D of the Ghana Gold Board Act 2025 Act 1140 and Section 7 of the Minerals and Mining Act 703 to purchase a minimum of 0.5 tons of gold per week from large-scale gold mines. Right, Honorable Speaker, the Bank of Ghana will purchase the gold acquired from large-scale mining sector. The gold purchase under Section 3D of the Gold Board Act and Section 7 of the Minerals and Mining Act 2006 shall only be sold by the Central Bank subject to prior approval of Cabinet and Parliament. Mr. Speaker, the following measures will be implemented in the short to medium term. Right, Honorable Speaker, measures on large-scale sector operations. A change in the current acquisition arrangement of the 20% large-scale gold output by the Bank of Ghana will be implemented in the short term. First, to ensure compliance by the large-scale mining companies, government shall establish an interagency committee co-chaired by the Minister responsible for Lands and Natural Resources and the Minister of Finance, with membership from the Governor, from the Bank of Ghana, and the Chief Executive of the Minerals Commission and the Ghana Gold Board. The Ministry of Lands and Natural Resources shall invoke the preemption right under Section 3D of the Ghana Gold Board Act to purchase a minimum of 20% of large-scale gold output, which translates to a minimum of 0.57 tons of gold per week. The gold acquired from the large-scale mining sector shall strictly be in the form of doré and processed in Ghana to promote local value addition. The transaction shall be in cedis only at the prevailing interbank exchange rate and at a discount to be determined by the parties. The applicable discount rate shall be determined based on volume between the Government of Ghana and the large-scale mining companies. Right, Honorable Speaker, the gold purchased in doré under this new acquisition arrangement shall be refined by local gold refineries, shipped to LBMA refineries for melting, bar casting, and stamping, and added to the country's fiscal gold reserves. Mr. Speaker, this gold shall only be sold by the central bank, subject to prior approval of Cabinet and Parliament. Mr. Speaker, these measures will ensure strict enforcement of commitment by large-scale mining firms, local value retention, transparency, good governance, and acquisition cost reduction, while supporting local gold refineries to attain an LBMA certification and standards. Mr. Speaker, the Ghana Gold Board, as the national assayer, is strategically positioned to enforce this newly proposed acquisition arrangement as it maintains field officers in gold rooms of all large-scale mining firms and assays samples from large-scale gold output before export. Mr. Speaker, the Ghana Gold Board has successfully piloted this new acquisition arrangement with 9 large-scale mining firms in the last 6 months. Mr. Speaker, the Ghana Gold Board will put in place a strategy to efficiently mop adequate volumes of ASM gold output, minimum of 2.45 tons weekly, through official channels to generate adequate foreign exchange for the country. Over the next 3 years, the Ghana Gold Board aimed to mop up about 127 tons of ASM gold per annum. Mr. Speaker, to achieve this objective in an efficient manner, the following policy measures will be implemented in the artisanal small-scale mining sector. The first, Ghana Gold Board shall arrange enough funds to acquire about 3 to 4 weeks of gold and ensure continuous market participation. Mr. Speaker, the Ghana Gold Board will assume full responsibility for the signing of off-take arrangement and the sale of all ASM gold it procures effective from March 2026. This will ensure effective end-to-end trading with off-takers and mitigate trading losses whilst pursuing trading gains for the country. Right, Honourable Speaker, the Ghana Gold Board shall deploy effective gold-backed derivative trading programs and hedging strategies to mitigate market risk. Mr. Speaker, again, to disincentivize smuggling and ensure that adequate volumes of ASM gold are purchased, the Ghana Gold Board may employ price incentives through spot world market price purchases and bonuses for licensed miners. Mr. Speaker, in the medium term, the Ghana Gold Board will promote ASM formalization, value chain traceability, and local gold refinery to further reduce costs whilst maximizing return from gold export in a sustainable manner. The Bank of Ghana and the Ghana Gold Board shall sign an agreement which mandates Ghana Gold Board to sell all foreign exchange accrued under this policy to the Bank of Ghana only. Mr. Speaker, at a cost to be determined by the two parties. The Ghana Gold Board is also to facilitate the establishment of a modern LBMA-compliant processing plant in partnership with private investors to optimize recovery, participation, particularly in the ASM sector, and promote sustainability. Special efforts in the form of nationwide water body cleansing campaign within designated mining areas will be undertaken by the Ghana Armed Forces. Mr. Speaker, the National Anti-Illegal Mining Operations Secretariat, NIMOS, shall intensify their activities against illegal mining, especially illegal mining activities in water bodies and forest reserves. Right, Honourable Speaker, the Ministry of Lands and Natural Resources and the Ghana Gold Board shall support and scale up sustainable initiatives such as the land reclamation. Mr. Speaker, government will deepen structural reforms that expand foreign exchange inflows whilst reducing persistent FX outflows. Key policy areas will include enhancement of non-traditional export, cocoa sector recovery, implementation of national policy on integrated oil palm development, remittance mobilization, developing new oil fields, and Mr. Speaker, energy sector FS savings, all to ensure that we can actually save more forests. Right, Honorable Speaker, the implementation of gas-to-power transformation policy will also significantly conserve the country's foreign exchange reserve, making way for sustainable reserve accumulation. The gas-to-power policy measure include the construction of state-owned 1,200. Mr. Speaker, the gas-to-power policy measure include the construction of a state-owned 1,200 power plant, construction of a second gas processing plant, and revamping of oil and gas sector to attract investment into upstream petroleum sector. Right, Honorable Speaker, most importantly, maintaining fiscal discipline at primary surplus level is critical to slow down the pace of foreign exchange reserve depletion. Mr. Speaker, in the last 8 years, the Bank of Ghana has relied on swaps, sale and buybacks, and other short-term facilities to build reserves. This has been done at a very high cost. In 2002, 2003, 2004, the Bank of, in 2022, 2023, and 2024, the Bank of Ghana accumulated reserves of about $3 billion United States dollars, $2 billion United States dollars, and $650 million United States dollars.